Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Policy Bazaar's Yashish Dahiya PB Health will disrupt the hospital incentive structure by incentivizing hospital stay. Narrow hospital networks with lower costs, easier claim settlements will be the future, claims the Policy Bazaar founder.
Mitigata, a cyber resilience platform, has raised $5.9 million in a Series A funding round led by Nexus Venture Partners with backing from existing VCs Titan Capital and Wave Ventures. The funding will accelerate the development of Mitigata's AI-powered security and risk management platform, enhance its suite of cyber resilience services, and scale operations across major Indian cities and international markets.
Raifa AI, a conversational AI platform building human-like voice AI solutions for enterprises, has raised $1.1 million in funding led by Seaborn Capital. The company will use this capital infusion to scale its operations in North America while advancing its conversational AI platform for call centers.
Logistics firm Delivery reported 5.6% increase in consolidated revenue to 2,294 crore rupees in Q1 FY26. The company's net profit surged 67.5% to 91 crore rupees versus 54.4 crore rupees in the same quarter last year.
Tesla has granted CEO Elon Musk 96 million shares worth about $29 billion, a move aimed at keeping the billionaire entrepreneur at the helm as he fights a court ruling that voided his original pay deal for being unfair to shareholders. Musk must pay Tesla $23.34 per share of restricted stock that vests, which is equal to the exercise price per share of the 2018 CEO award. Well, those were the headlines we've been tracking for you this evening. On What's Brewing today, Palo Alto-based cyber risk management firm SAFE has raised $70 million in Series C funding. The round was led by Avatar Ventures with participation from Saskina Asia Venture Capital, Next Equity Partners, Prosperity 7 Ventures, and existing investors including 8 Roads, John Chambers, and Sorensen Capital, among others. From pioneering cyber risk quantification to delivering fully autonomous third-party risk management, SAFE is now pushing the boundaries further. It has unveiled a fully autonomous continuous threat exposure management solution that aims to fast-track SAFE's bold vision of cyber AGI, or cybersecurity superintelligence, and cement its dominance in the fast-evolving cyber risk landscape. To talk to us about what this means for SAFE and the cybersecurity ecosystem at large, joining me now is its co-founder and CEO, Saket Modi. Saket, welcome back to Startup Street. Now, you've always positioned SAFE as more than just another cybersecurity tool. You are building a strategic intelligence layer. Tell us what this fundraise means for SAFE and how it fuels your larger vision to build cyber AGI.
Certainly, Shruti. First of all, it's an honor to be here with you. I've been on this show so many times with you.
Yes.
Every major milestone we've celebrated together, and it's such an honor to be back. So thank you so much for having me. To answer your question very objectively, SAFE from day zero has always thought about the fundamental problem of cybersecurity, which is how do you go ahead and take risk-based decisions to go ahead and either reduce the likelihood or the impact of a particular cyber risk scenario or a hack, in other words. And that's something what we've been doing from the very, very beginning. We started from a market called cyber risk quantification. We crushed that market. We are the number one in the world. Forrester recently, almost a month back, came out with a wave of the top platforms on cyber risk quantification in the world. And we're on the extreme top right, not just on the top right, but the extreme top right, which means we're the number one on the planet. An adjacent platform to that we launched 2 years back, which is called third-party risk management. And we launched as the first ever vendor, which does 100% autonomous third-party risk management. And again, out there, we are fast becoming the absolute undisputed champion of that market. As an extension of that, we actually announced the third module in our same platform 2 days back, and that is called Continuous Threat Exposure Management, CTEM. And we use the same playbook that we had in CRQ, Cyber Risk Quantification, and Third-Party Risk Management. Then how do you go ahead and deliver things 100% autonomous, end-to-end via agentic AI? So we put all of that together. This is all progressing towards our mission to achieve something called Cyber AGI, which is ultra intelligence, super intelligence for cybersecurity.
Sure.
So that's what we are heading towards, and that's where majority of our funding will be used for.
Yes. Yes, we'll delve deeper into that, Saket, but let's now talk about your big product reveal. You claim it is the world's first fully autonomous continuous threat exposure management solution. So help us understand why this is a game changer for enterprise cybersecurity. You've called traditional, CTEM tools black box and lacking transparency. So tell us how SAFE's model different and more actionable for risk and security leaders.
Yeah, so because we are champions of, you remember the first market which I spoke to you about, cyber risk quantification. That only happened because we use open standards like the FAIR model, like the attack MITRE framework, which is there, which is, by the way, the FAIR model, for example, is used by over 50% of Fortune 500 companies, majority of the government organizations around the world. Anybody can use it because it's an open standard. It's done via the FAIR Institute. So we have the commercial license to that, and we actually were the first companies to found the FAIR Institute. I sit on the board of directors out there, and of course today it's a much bigger movement than just SAFE by itself. We're applying the same degree of transparency to the CTEM market, which is basically vulnerability management, that all of the prioritization will be driven by open box, open standards, which is community driven rather than a group of smart people coming together and saying how the prioritization of issues should happen in an organization.
Okay, so from CRQ to TPRM and now CTEM, you're clearly building a layered long-term playbook, Saket. How do these pieces come together to drive SAFE, closer to its vision of cyber AGI that you were mentioning?
So if you take a step back there, Shruti, I mean, if you think about OpenAI, Google, Meta, and the list is long, there are enough companies out there which are trying to build what they call as AGI, which is artificial general intelligence. And remember, they will build this based on generically available data on the internet, on social media, et cetera, et cetera. And I think a lot of that will happen in the near future. But when that happens on data which is mile wide but inch deep, there will be AGI in our view, which will be very, very super specialty. There will be a healthcare AGI, in other words, a doctor which can see any and every report and actually give a better analysis than any actual doctor, which will come, and that'll be health AGI. Similarly, in cybersecurity, there will be cyber AGI, which will promise the ultimate thing that cybersecurity is always promised. How can you make a company unhackable? How can you predict a hack and then detect if there's something going wrong and block it before anything goes wrong? And that is what we define as cyber AGI. And we will build cyber AGI is the commitment that we have to ourselves, most importantly, and then to our customers and investors and partners in the broader community.
All right. So, Saket, tell us what's next on the innovation roadmap. Should we expect SAFE to venture beyond CTEM, or is the focus now on scaling this layer? And given you've posted triple-digit growth 3 years in a row, what is the revenue outlook moving forward?
Yeah, actually, Shruti, we launched the platform on your show in 2020, and 5 years, the average growth in ARR has been 120% every year, year over year. So we plan to continue the triple-digit growth in the near future. We are easily one of the fastest growing cybersecurity companies in the world. And we do it in a sustained way. We don't do it with burning crazy amounts of money. Our magic number, which talks about the sales and market efficiency, is more than 0.7, which easily makes us best in class for a company growing on triple digit and at the same time being very, very efficient of growth. And that's really the reason why a lot of people today call as the funding winter, which is going on. Despite that, we were able to pull off a $70 million fundraise in a matter of a couple of months. So that talks about the strong first principles that we're building this company with.
Okay, one final question, and in 30 seconds, if you could answer that. What will it take for SAFE to actually achieve cyber AGI, and how close are you today to making that leap?
CRQ, when we talk about TPRM, CTEM, and there'll be multiple such blocks that we'll have to add, Shruti. So are we very, very close to cyber AGI? The answer is no. I would give anywhere between 5 to 7 years from where we are, more around the 2030 to 2035 range. But we think we're extremely well positioned to go ahead and achieve that better than almost any vendor out there in cybersecurity.
Well, on that note, it's time for me to wrap up our conversation. Saket, many thanks for your time and for joining us on Startup Street today, and wish you the very best. And we'll, of course, keep tracking your journey for the next 5 to 7 years till you hit that mark. Thank you so much.
I keep coming back. Thank you.
On the investor eye, W Health Ventures is doubling down on building India's next generation of healthcare companies from the ground up. The early stage VC firm has announced a $70 million second fund focused entirely on company creation, a hands-on model where startups are incubated from scratch to solve some of healthcare's toughest challenges. With its first fund, W Health backed 12 companies, including Beto, Visa, Milo and Nivan, that now serve over 25 million patients globally. Fund 2 will focus on 2 proven themes: AI-powered B2B health tech and single specialty care platforms that fill critical gaps in India's healthcare system. Now, the first bet, Everhope Oncology. Joining me now to discuss this further is Pankaj Jethani, the managing partner at W Health Ventures. Pankaj, thank you so much for taking time out and being here with us on Startup Street. You know, you've just announced a $70 million fund too. What sort of sets this fund apart in India's growing healthcare investment landscape? And what's the kind of interest you're seeing for startups in India in this space?
Absolutely. Arundhati, thanks for having me on the show. I think the opportunity for healthcare in India and the US-India corridor or global corridor from India is incredible. We are seeing the healthcare market now being about $370 billion or so. But there is still a lot to be done in the sector. For every $100 that an American individual or patient spends on healthcare every year, an Indian would spend $2. Now, that means that there's still a lot of catch-up growth that needs to be happened just because we're not spending enough on healthcare. So that is the thesis of the firm. We are building some of these generational companies from scratch that should exist, but today they don't. And with the advent of both AI as well as a bunch of new single specialty models, we are seeing a lot of opportunities open up both in India as well as overseas. So lots of opportunity. The sector continues to grow 10-12% year on year. For the sector as large as healthcare to grow that quickly signals that there is a lot of opportunity. With the opportunity
continue.
No, with the opportunity are also large white spaces. I believe that in India, we're probably at the cusp of innovation in a lot of sectors, including financial services and commerce, etc. But when you think about healthcare, we are probably 10 to 15 years behind. So if you want to know the future of healthcare in India, you have a time machine, right? Just catch a plane and go towards the US or China. A lot of future care models have become apparent. Some of the reason why this market is growing so much, but there still are large white spaces, because building in healthcare is hard. It's a regulated industry. It is fairly complex to navigate. There's a lot of information asymmetry.
Sure.
And founders find it challenging to build. Yeah, sorry.
So it's challenging, and you're saying that, you know, there's so much space here to grow and there's a lot that needs to be done as well. You know, W Health takes a company creation approach, right? So how does that differ from traditional VC models, and why is it especially effective in this sector?
So the investment actually begins 18 months before the company is born. So we spend 12 to 18 months validating the concepts, identifying the white space, validating the concepts through a very structured research process where we have literally thousands of conversations and data points with patients, physicians, buyers, etc. 93% of the ideas get killed in this process. And the companies we eventually end up building are probably in the 8th or 9th iteration. So a lot of the early product market fit research happens internally. At that point, we capitalize the business. We partner with exceptional founders. We get them on board and take them through the journey of both 0 to 1, right, building the company from scratch, as well as from 1 to 10 to scaling this company to, let's say, about 100 crore or so in revenue. So it's a very differentiated approach. We can't do this 25 to 30 times in a fund. We build 2 companies a year, and that's the thesis going forward as well.
So you want to build 2 companies a year, and Everhope Oncology is your first fund to investment, right? How does it sort of reflect your vision for next-gen healthcare in India? And how many companies are you looking to do this year? Another one that you're going to bet on this year?
No, absolutely. Definitely another company currently operating in stealth that we will announce very quickly in the US India corridor. And then a couple of companies every year after that. Everhope kind of symbolizes the thesis going forward. So many of us know friends, family who get diagnosed with cancer in their 30s, 40s, or later, but being diagnosed very, very late in their journey. The cancer experience is very, very challenging. Even though outcomes have improved slightly over the last few decades, we are decades behind when it comes to oncology. An average pediatric cancer case, for example, a child with pediatric cancer has a survival rate of 40 to 50% in India, 5-year survival rate. The same number with almost the same drugs is 90% in the US. So, with Everhope, the mandate is how do we bring modern, uh, sophisticated oncology care to patients very, very close to their homes, right? Cancer is
Right.
seen as a scary disease, and that's what we're trying to change with Everhope. With more empathetic, high quality care, we're bringing in the world's best innovation for patients in India.
Right. So empathetic, high quality care is what you're aiming to do with that particular bet. But your portfolio from Fund 1 has already reached about 25 million patients, right? Can you share what you've learned from these bets that's shaping Fund 2? If you could take us through the kind of returns you're seeing from Fund 1?
So we have a lot of interest from LPs and investors thanks to this differentiated model. When we are building companies as co-founders, we do, unlike other traditional venture capital funds, we do have a higher ownership. Follow-on investors are investing in the company, A, because of the traction, B, because of the founders, C, because of our involvement. Um, and um and I think the experience from Fund 1 has been phenomenal. I think what we have seen is what are the mistakes commonly made in healthcare. We've spoken with over 2,500 healthcare companies in that journey. Where are the places where companies typically get stuck? What helps with growth, sales, marketing, both in India as well as in the US India corridor? And I think what triumphs is giving patients a 10x better clinical solution, treating them like, sorry for the use of the word, treating them like humans and treating them like what you would want your family to be treated. And if you do this consistently over and over again, patients will come. So there's no rocket science here. It's just providing empathetic, high quality care in a providing 10x better care, 10x better experience, and patients will come.
So making, care over there, healthcare care more human-centric at this point and giving them better quality of care. All right, Pankaj, thank you so much for joining us here on Startup Street, and we wish you all the best with this fund going forward.
Thank you, really. Thanks for your time, and thanks for having me.
Well, on that note, it's time for us to head into a short break. But coming up on the other side, a conversation with Swami Siva Subramanian, Vice President of Agentic AI, AWS on artificial intelligence, and a new approach to develop software using generative AI. That and more on the other side.
Welcome back. You're still with us on Startup Street. At its recently held AWS DevSphere 2025 event in Bengaluru, AWS unveiled a new approach to develop software using generative AI, the AI-driven development lifecycle methodology designed to place artificial intelligence at the heart of software development. It also announced its AI native builders community, a peer-to-peer network of technology leaders united to share breakthroughs, avoid pitfalls, and accelerate the journey to AI native transformation. My colleague Ritu Singh caught up with Swami Sivasubramanian, VP of Agentic AI, on the sidelines of the event to talk about these new launches and more. Take a look.
It is an exciting time to be in the AI industry with the dawn of AI agents. Agentic AI is arguably one of the biggest transformation in the software industry since the dawn of internet.
Well, you've called agentic AI the most transformative change that we've seen since the dawn of the internet. That's quite the statement you're making. But what real business problems is Gen AI solving today, and how do you really distinguish between what's hype and what's reality on ground?
So one of the amazing things, since I have been talking to many customers in the past couple of days, and I see not just these agentic AI systems only being done by startups which are exploring new ideas, but also mainstream enterprises. Let me start off with actually an example of like Apollo Tires.
Okay.
They actually put AI agents in to solve something for the manufacturing with something called manufacturing reasoner.
Okay.
So now what essentially AI agents are doing is, it is actually doing things like root cause analysis in the operations, and it is improving this RCA by 88%. So what used to take like 7 hours is decreased to less than 10 minutes.
Well, India is often seen as this digital growth engine, but how ready are Indian businesses to adopt Gen AI at scale? And also, what sort of gaps do you see, whether that is in infrastructure, data infrastructure, cloud maturity, or even digital talent?
First, the general problem in agentic era is that AI agent space itself is like very nascent. I mean, when you think about it, generative AI itself is a term that has been around only for 2 years, even though it feels like forever. So there is inherently now, there is a skills gap that exists. And this is an area where we have invested a lot in being able to actually get AI engineers to be ready. And this is where we also announced a new program where we are going to be training actually engineers, especially not just students, but also early career professionals to be AI ready. And we have a goal to the first year to train more than 2.7 million folks in the year one.
Well, I can't help but ask you, we've seen recently one of the largest IT companies in India, TCS, cutting off 2% of the jobs, not directly linked to Gen AI, of course, but because of the skill mismatch, so to speak. I want to understand, as Gen AI starts to solve more and more complex business problems, what sort of implications will that have when it comes to one job, and on the other hand, the cost structure of companies as well?
So it is now in such a world, then there are going to be actually changes in terms of how we do our day-to-day tasks in the business world. It can be like how a software developer builds systems to how a product manager actually does things, or a financial risk analyst does like underwriting or whatnot.
Yeah.
But now what you need in such a future world is actually for them to be AI ready, so that they know that in a world that they are actually going to be equipped to do things 10x faster, so that they can actually now be even more productive. That's why the programs like what I talked about on being able to be AI ready from the get-go, whether you're a student or whatnot, is super important. But it's not just about AI. In such a world, you also want everybody to be also cloud and AI ready. This is where even in 2017, we announced that we wanted to skill everyone in cloud computing by 29 million people by 2025. And this year, we actually were able to surpass our goal and got to 31 million. And so the way you're going to enable and equip all of us in the future world is to be able to also be ready for this new era where the tools that we are going to use is going to change. And one of the things I always say is, when you look into when an era of this kind of massive transformation happens, and how to look at what is going to happen in the future, you got to be inspired by what happened in the past on similar such transformation. When the world moved from like manual switching or telephone networks to automated, or like when it happened. We as youths fundamentally are creative problem solvers. And we transformed them. So what we did, so that now we started operating at the next layer to solve the next set of creative problems. So this is going to be the same thing as we must in solving that.
If I just zoom out to what's happening globally, you know, fragmentation, the different regulatory policies and environments, the digital conflicts, how is AWS navigating all of this, and how is the change product pipeline?
I mean, the policy landscape, I think we monitor closely, and something we look at what it means for our customers. But policy landscape always.
Or the geopolitical landscape, the risk for sovereign AI capabilities, I mean, for each nation to build that.
I mean, when it comes to sovereign AI, it is not just about policy issue alone, but when you think of actually, for instance, what in India, there are some leading large language model startups like Servam and others. What they are able to do is actually now customize some of these models to specific Indian languages and dialects, and being able to do, and where we as AWS are also now enabling them to implement our technology. So, and this is something we are actually not just doing in India, but also around the world. And this is an important that we as an industry are going to be doing this over and over.
Well, with that, it's a wrap from both Arundhati and me, Shruti, on this edition of Startup Street. More news updates coming up on the other side.